I have been trading for 10 years, and in today's video, I will teach you everything that you need to know about trendline trading. Trendline can work as resistance or support in the market, and traders can use to place reversal trade from these particular levels. As you can see here, the market got rejected back from this trend line because the trend line was working as a resistance here. Similarly here, it was working as a support and you could place your trade in the upward direction if you get the confirmation. But it doesn't mean that you can blindly place your trade once you have a trend level, because other confluences are also necessary. You can't place your trade just because you have a single trend line in your favor. The other factors also plays very major role. So do not trade blindly just because you have one trend line. Similarly, if you have a trend breakout, it can be a sign of trend reversal. Like in this case, previously it was a downtrend, market got rejected back from this trend resistance level, but as soon as market broke this level, you can see the previous trend, which was downtrend, is now changes into an uptrend. But it doesn't mean that just because this trend line is broken, this trend changed. Other factors are also there, which means that a simple trend line breakout doesn't guarantee you that the trend will change. The other factors plays very important role also. So do not trade blindly just because you saw a breakout from the trend line. Similarly, in this case, if you draw a trend support level, market was respecting this level and it was going in the upward direction. But as soon as the breakout came, the market started falling very sharply. This fall is not just because there is a breakout from the trend line. There are other factors, like you can see the momentum was dead here. Market was not moving sharply in the upward direction, so the volume was also missing. So other factors are also important, which we will talk about in this video later. Treat trend line breakout as one of the confirmation, but do not rely completely over them. Now you know what are trend lines and why we use them. Let's understand how to draw a perfect trend line. To draw a perfect trend line, you have to have four factors in your mind. The first one is you need at least two swings. They can be swing highs or they can be swing lows depending upon the market condition. The second thing is you have to draw an area by using both body and wick. Why we need to draw an area from a trend line is because the trend line is not a particular level where the reversal happens. It creates a zone like a support or resistance level. We all know that support and resistance level are not on a particular level. They create a zone where traders wait to enter and exit their trade. Similarly, a trend line is also a support or resistance level. So we have to create an area so that we can capture our trading opportunity at the right time. The third thing is don't force draw a trend line. You can always draw a trend line in a chart, but the trend lines that are going to work are the obvious ones. You don't have to work really hard to find them. They are quite visible through naked eye. So don't force draw. Don't try to act like an artist. Fourth one is keep updating them. Support and resistance level do not stay constant. They are not static. They keep expanding and contracting with time. So you have to make sure that you are updating your trend line with the market situation. Now you know the rules. Let's start drawing trend lines which we can use in the market to place some successful trade. This is a clear downtrend market. This is the first swing high and this is the second swing high that we require to draw a perfect trend line. First, we will connect the wick of this first swing high to the second swing high, and then after that, we will clone it and we'll draw an area. So we'll start from the high, and this is our trend line. To draw an area, simply clone it and place it inside until you hit the body of the nearest candle. As you can see, the bodies here are far, but here you can see that trend line hit the body. So this is our area of resistance, or this is our trend line area. I'm not forcing here any trend line. These two highs are quite visible, and let's see if we have to update it in the future or not. And you can see market reverses from this particular trend line, but you can see that this wick expands the resistance of this trend line. So you have to update this particular trend resistance now. Simply erase the area line and include the wick of this candle. This is the last swing high. To draw an area, simply clone this trend line and move it inside and hit the body of the nearest candle. Like in this case, we have got the touch from this particular candle, and this is our newly updated trend line. Let's see how the market will behave in the future. And you can see here what happens. Market reverses from this zone. Here we don't have to update our trend line because you can see this is inside this particular trend line. If something goes outside, we will then update our trend line. Here again, you can see market did respected this zone and reverses quite strongly. That is how you can draw a trend resistance area which can be used to place successful trades. Similarly, this is an uptrend market. We have this swing low. This is the first swing low and this is the second swing low. We will try to draw an area of a trend support by using these two swing lows here. We will start by connecting the first swing low wick to the second swing low wick, and this is our trend line. To draw an area, simply clone this trend line and place it on the body of the nearest candle, which is here. So this particular area is our trend support level. We are not forcing any trend line. This is clearly visible that these two swing lows are actually visible through our naked eyes, and let's see if we have to update it in the future or not. And you can see market hit that particular zone and it reverses, which means that there is an opportunity for you to place a trade if you have other confirmation. What I can see here is there are so many confirmation, like this is a previous resistance level which here is working as a support. This was the pullback phase. It's a strong support level, also a horizontal support level. If you look at the volume and the price action here, you can see that the market was getting weaker and the buyers are entering, which means that the market didn't reverse just because this is a trend support area. The market reverses because there are other factors also involved. Don't worry, I will teach you about these strategies as well in this video, but right now we are focusing on drawing a perfect trend line. So this is the trend line that is working right now. Let's see how the market will behave in the future onto this trend support area. And here you can see market hit that zone and got reversed. Right now you have to update this trend line. Why? Because you can see these wicks crossed the zone completely. So we have to include this particular wick section as well, because the support level is expanded by this particular swing low. So to update our trend line, we just simply have to delete the previous area line, which is this, and we will simply include the wick, which is here, and after including the wick, to create an area, simply clone this particular trend line which we have updated right now and just include the body of the nearest candle, which is here. You can see we have included the body, and this is our newly updated trend support level which we can use in the future. In this case, this is a clear uptrend market. This is our first swing low and this is our second swing low. Let's draw a perfect trend line using both of them. First step, connect the wick of the first swing low to the second swing low. To create an area, simply clone this trend line and place it at the body of the nearest candle, which is here, as you can see. And now we have our perfect trend area. These two swing lows are clearly visible, so we are not forcing any trend line here. And fourth one, we will have to wait if we have to update it in the future or not. Let's see if this trend line is going to work or not. As soon as it hit that level, it reverses, which means that it worked here. You could have placed a perfect trade here if you have drawn a perfect trend support here. Suppose in this case, if you are following the wick only, I can see that there are no touches on the trend level. The market hit the zone, but it didn't hit the trend line which was drawn using the wick of the candles. And the market, you can see, reverses here, and we don't have to update our trend line because you can see there are no crossing here. Let's see what happens in the future. And here market hit that particular support level and market, you can see it started going up. Now what you see here, I can clearly say that we have to update our trend line. Although our area is working, but the support zone is now expanded by this particular candle. So we have to include the wick of this candle to update our trend line. What we have to do, we just simply have to remove the area line and we will include the wick of the candle. To draw an area, simply clone it and place it at the body of the nearest candle, which you can see is here. So now this is our updated trend support level. Let's see if this trend line is going to work in the future or not. And here, as you can see, market reverses quickly after hitting this zone. What you have to notice here is that market didn't touch the trend line which we have drawn by using the wick. Market respected this particular zone, and that's the reason why you have to draw an area when you are trading with a trend line. So now you know how to draw a perfect trend line. Let's move on to the next topic, how to trade using a trend line according to the market situation. Trend line trading strategies are the easiest if you know one very important concept, which is how reversal happens in the market. There are basically 4 stages that signals upcoming reversal. The first one is momentum loss in the current market. The second one is reversal price structure formation. The third stage is change of character, and the last stage is break of structure, which is a reversal confirmation. So let's understand all these 4 stages in detail so that you know when the market is going to reverse. The first stage is loss of momentum. So in an uptrend, when market is creating higher highs and higher lows, and when market fail to break the previous high and reverses like this is what we call loss of momentum. There are only 2 ways market can signal loss of momentum. First one is when market failed to create new high and reverses from the same level. Second one, when market goes down but failed to even reach the previous swing high and it reverses. These 2 conditions are the only condition which shows loss of momentum, because you can see both of these situations shows that buyers failed to create a new high and sellers took control. The second stage of market reversal consists of a reversal price structure formation, like a head and shoulder pattern, a double top pattern, a triple top pattern, or a descending triangle pattern. There are other patterns as well. All of these patterns shows different price structure, but the only thing that they are suggesting here is a loss of momentum. If you look carefully here, you will find that previous high was not broken here and market reverses without even reaching the previous high. And in this case, market goes to the previous high but failed to break and it reverses. Similarly, in triple top, market tried twice but failed to break the previous high and it reverses at the end. And lastly, in descending triangle pattern, market did not reach the previous high but created new lows again and again, and ultimately it broke down in the downward direction. All these things shows one thing, that the buyers are losing their control and market can reverse. The third stage is change of character. When market is going in an uptrend and you find that market goes down like this, it tried to go up and it failed, and suddenly market goes down and breaks the previous swing, which is higher low in an uptrend. This is what we will call a change of character, because market previously was moving in an uptrend, creating a price structure of an uptrend by creating higher highs and higher low. But suddenly market created this lower low, changing the character of the previous price structure. Like in this case, you can see that previously market was creating higher highs, and after that market failed to reach the previous high, and here this was the higher low swing which was broken here. This was the neckline which is broken here, and market created this lower low, which suggested this is a change of character. And if you look carefully, if you read this chart, you will find that previously the buyers were more, the sellers were less. The buyers were more, the sellers were less, and here the buyers were dropping and suddenly sellers took over. If you compare the strength, you can say that the sellers are here more than the buyers here, which is showing that the buyers are losing their control, and you can expect a reversal now because there is a change of character. The market created new lower low. Lastly, the last stage of reversal, which is break of structure. So what is break of structure? When market is moving in an uptrend, it creates higher highs, higher lows, higher highs and higher lows, and higher highs. When market breaks its previous high and creates a higher high in an uptrend, this is what we call break of structure. Similarly here, this was the previous high, market goes up again in the future and breaks here and created new higher high, which is again a break of structure. Similarly, in a downtrend, market create lower lows, lower highs, lower lows, lower highs, and lower low. When market broke previous low and create new lows in a downtrend, this situation is called break of structure because the previous structure was broken. In simple words, we can say that when market continue its trend and breaks its previous swing highs or swing lows, this is called break of structure. Ultimately, how the market will reverse? First of all, you will find loss of momentum, like in this case. Then you will find reversal price structure formation. After that, you will find that market broke its previous swing and there is a change of character. Like in this case, market created a lower low. And at the end, when market broke this particular lower low, this is called break of structure. This is where our reversal is confirmed because now all these stages have been completed and you are now very sure that market now will going to reverse. Similarly, in a downtrend, when market fail to break the previous low and it reverses, this is called loss of momentum. In the downtrend also, there are only two ways market signal loss of momentum. One, when market reverses from the previous low, and second, when market reverses without even reaching the previous low. These two situations shows loss of momentum, which is the stage 1 of reversal. The second stage consists of reversal price structure formation, like in this case an inverted head and shoulder pattern, a double bottom pattern, a triple bottom pattern, or an ascending triangle pattern. All these patterns shows one thing only, which is loss of momentum, which means that the buyers are taking control here and the sellers are losing because this was the previous low. Market failed to create a new low and it reverses without even hitting the previous low. In this case, market tried to break the previous low, but it reverses from the same level. In this case, it tried 2 times, but it failed. And in this case, the story is the same. Market failed to break the previous low and the buyers are now pushing the market in the upward direction, which means that this is a signal that the reversal can happen in the market. But the other two stages are also important. So once you have a reversal price structure, you then will wait for the other two stages to be completed so that you can be sure that this is a confirmed reversal. The next stage, change of character, when market break the previous lower low swing and creates a higher high here, which shows that now the market is moving in the upside direction strongly, breaking its previous lower high swings. Because previously the structure here is a downtrend, market is creating lower lows, but suddenly market creates a new high, which means the buyers are now taking control, which means reversal can happen very soon. Once you have a change of character, you then only have to wait for break of structure, which happens when market break this higher high swing. And this is the final stage, the fourth stage of reversal, in which you will find market creating reversal structures, showing loss of momentum, change of character, and ultimately giving us a break of structure, which will confirm a reversal. So now you know how reversal happens in the market. It will be easy for you to trade with any price action strategy. So let's move on to the strategy part. So mainly there are two strategies that we can use when trading with the trend line. The first one is a reversal trading strategy, in which we take reversal trade when market hit a trend line. The second strategy is breakout trading strategy, in which we take breakout trade when market break a particular trend line and we take trades in the direction of the breakout. Let's start with the first strategy, which is reversal trading strategy. The rules are very simple. There are only 4 rules you have to follow and you will be able to take successful trade. The first rule is wait for the market to hit a valid trend line. I have already taught you how to draw a perfect trend line, so I don't have to teach you again. But if you have a horizontal level of support or resistance level near to that trend line, then it will help you furthermore, because horizontal level works best as institutional traders use them mostly. Or you can also use Fibonacci levels, in which you can use 61.8, 50 and 38.2 level to take reversal trades, because these level works best. The second step is you have to then wait for a reversal candlestick pattern formation. If you're trading in an uptrend, you can look for bullish reversal pattern. And if you're trading in a downtrend, you can look for bearish reversal pattern. Bullish reversal pattern consists of a bullish engulfing candle, a bullish inside bar formation, a dozy candle in the form of morning star, or a bullish pin bar pattern. For bearish reversal pattern, you can look for bearish engulfing candle, a bearish inside bar formation, an evening star, or a bearish pin bar pattern. There are other patterns as well, but these patterns works the best, and that's why I'm teaching you only these patterns. Once you have these reversal candlestick pattern, you then will switch to the minor time frame. The combination that you can work with are like this. If your major time frame is weekly time frame, then you can switch to the daily or 4-hour chart. If your major time frame is daily, you can switch to 4-hour or 1-hour chart. If your major time frame is 4-hour, you can switch to 1-hour or 30-minute, and so on. Once you switch to the minor time frame, you then will first look for a reversal price structure. In an uptrend setup, you will wait to see an inverted head and shoulder, a double bottom, triple bottom, or an ascending trend. Once you have these reversal price action pattern, you then will wait for change of character, in which you will wait for the market to create a higher high swing, breaking the previous lower high swing as described in this particular image. And the last step, the entry part, is when you will find break of structure. Once you have break of structure, you then can enter your trades. Similarly, for a downtrend setup, you will look for a head and shoulder pattern, a double top pattern, a triple top pattern, or a descending triangle pattern. Ultimately, we can say that you are looking for loss of momentum in the market. Once you have loss of momentum, you then will wait for the market to give you change of character by creating new lower low swing, breaking the previous higher low swing. This is your neckline. Once it's broken, you then will look for break of structure, and once you have a break of structure, you can enter your trade. Now you know the setup. Let's take some real life example with the same strategy. In this case, this is a daily time frame chart, which is our major chart. This is our trend line. This is our resistance zone, which was previously working as a support level. The first thing which we did was to wait for the reversal candle, which is here. We have this strong reversal candle. And once we have a reversal candle, we will then switch to minor time frame, which is in this case is 4-hour chart. We will wait for the reversal price structure formation or loss of momentum. Here you can see that market created a triple top pattern, giving us a clear sign that this is a reversal price structure, which means that market can reverse. You can see that this is the same resistance zone and same trend line you are watching here and here. So once you have a reversal pattern formation, you then will wait for the break of structure. Here you have your break of structure, because this lower low formation shows change of character, and once you have a change of character, you then will wait for the breakout, and this is your breakout, which is a confirmation that this is a break of structure, so you can enter your trade here. All this action happens on this candle, and after that you can see that market falls. Similarly, in this example, this is our daily chart, which is our major chart. We have this trend line zone, and in this case we didn't have a clear resistance level, so we used Fibonacci, which is, you can see here, and we used 61.8 level as the resistance, as the horizontal resistance, which you can see here. This is the same trend line you are watching here, and this is the same Fibo level you are watching here. In the major time frame, we have this strong candle formation, which is a reversal candle. Now once we have a reversal candle, we will then switch to minor time frame, which in this case is 4-hour chart. On 4-hour chart, we got a double top pattern, which is a reversal structure pattern. Once you have reversal structure, you then will wait for change of character, and the change of character will happen when market creates a lower low. Market created a lower low here, which means the reversal is very near. All you need now is a break of structure, and this breakout happens and it gave break of structure. This particular confirmation here or in this candle, then you can easily capture this particular move. So all in all, we have this trend zone. This is the same trend zone. This is the Fibo level 61 which we used. This is the same Fibo level. So we have resistance, a trend resistance, and a horizontal level. We got reversal candlestick confirmation. We will then switch to minor time frame. We will look for reversal price structure, which is double top formation here. After that, we waited and we got a change of character. This is the lower low formation. Previous low was this, which was broken here. So this is change of character, and once there is a change of character, we then wait for the breakout for a entry. This is our break of structure, and we can enter our trade here, and after that market falls smoothly. So this is how you can take reversal trades by using trend lines. Now let's move on to our next strategy, which is breakout trading strategy. Breakout trading strategy is the easiest. The rules are very simple. You need break of trend line. The second rule is to wait for the reversal price structure formation with change of character. This is a must situation. You need to have this. You can't take trades once you have a breakout. You need reversal price structure formation, and you need change of character as well. And the last part is you have to wait for the break of structure, then only you can enter your trade. So the setup looks like this. This is your trend line. It's been broken here, but you can't enter your trade because you need other two factors, which is a reversal price structure or a loss of momentum with a change of character. You see that the previous swing low was this. This is a new lower low, which means this is a clear case of change of character. You have a change of character, you have loss of momentum because market reverses without even breaking the previous high. So you have loss of momentum, you have change of character. You then will wait for the break of structure, which is here, and you then can enter your trade here. Similarly, to take a bullish reversal, this is your trend line, this is your breakout, this is your change of character because market formed a higher high breaking the previous swing high. So this is a clear sign that the buyers are interested, but you will not enter your trade here. You will then wait for a reversal, and again when the market will break this previous swing high, it will confirm us a break of structure. Once you have a break of structure, you can enter your trade here, here, because this is a confirmed reversal signal. Now you know how to take breakout trades. Let's discuss some real life example. This is your trend line. This is your double top reversal pattern formation. This is your breakout, and this was your previous swing low, which was broken here. You can see this was the neckline. It's been broken here, which means this is change of character. Market formed a lower low, but you cannot enter your trade once you have a change of character. You will then wait for a break of structure. Here market goes up and then it goes down, breaking the previous lower low, which is a sign of break of structure. And once you have a break of structure, you then can enter your trade here, and market after that goes down. Similarly, in this example, this is your trend line, this is your breakout point. This was the previous swing high, which was broken here, which means this is change of character. Market created a higher high. Here we didn't have a particular reversal price structure, but we can clearly see that there is a loss of momentum because previously market was going like this. After that, market goes up, it goes down, and it reverses. It goes down and it reverses, which means if you only look here, you can easily say that there is a loss of momentum because market failed to break the previous low, which is here, and it reverses. Market not only reverses here, it broke the previous higher high swing, which shows change of character. This is our break of structure, and you can enter your trade here, and after that market goes up like this. So that is how you can trade with the trend line, by reading the chart carefully. Price action really works in the market if you follow and if you read them correctly. If you have any doubt, let me know in the comment section. We'll see you in the next video. Till then, keep trading, keep working hard. Good day.